Hi, welcome to the Crypto Republic. Before we dive in, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Imagine a storm rolling across the financial world, silent at first, like thunder building over the horizon. And at the center of it stands one name that never stays silent for long, Elon Musk. For years, he's rewritten the rules of energy, transportation, and communication. Now he may be about to rewrite the rules of money itself. Today isn't rumor, it's confirmation. The alignment between Musk's digital payment vision and Ripple's liquidity network that could fuse the speed of rockets within the precision of global finance. If you hold XRP or even watch it from the sidelines, this is the episode that changes how you see the future of value. Let's ground ourselves. As of October 2025, XRP trades around $2.39, consolidating after volatile swings that rattled retail investors but thrilled institutions. Behind the numbers is a tectonic shift. Insiders from Musk Ventures, European banks, and Ripple have been architecturing interoperability standards that could finally make digital money move as freely as data. It sounds audacious, but so did reusable rockets and self-driving cars. To grasp why this alignment matters, rewind 2 decades. Back in 1999, Musk's first big disruption was X.com, the company that became PayPal. He wanted instant borderless money long before crypto existed. Regulators balked, banks resisted, so he pivoted. But the obsession never died. Fast forward to 2025, the man who once tried to wire the world through the internet now owns X, a platform connecting hundreds of millions of users and countless merchants. It's the perfect laboratory for his original dream, except this time, the technology finally exists. Ripple built the rails he was missing. Think of RippleNet and the XRP ledger as the telegraph lines of modern value. In the 19th century, the telegraph collapsed weeks of waiting into seconds. Today, XRP collapses days of settlement into moments. That's not hype. That's physics applied to finance. And inside private meetings, confirmed by multiple European attendees, Ripple executives and envoys tied to Musk financial engineers have been aligning APIs, compliance, frameworks, and liquidity corridors. This isn't a handshake at a conference. It's integration at the code level. When Lord Belgrave, the former City of London banker, surfaced these details online, markets barely blinked. But those who listened closely heard the hum of machinery starting up, the kind that doesn't stop once it's in motion. So what does alignment actually mean? In plain English, XRP's on-demand liquidity tech can plug directly into X payments, the digital wallet Musk's team has been quietly testing under the banner of instant global value transfer. Picture billions of microtransactions per day. Creators paid instantly, subscriptions settled in seconds, AI agents buying data or compute without friction. Every transaction needs liquidity. That's XRP's language. Ripple supplies the bridge. Musk supplies the highway. It's the same symphony humanity played during every technological leap. The Medici invented the double entry bookkeeping, and global trade exploded. The telegraph connected continents, and stock exchanges synchronized overnight. Now blockchain connects liquidity pools, and value itself becomes programmable. Each era had a conductor. In this one, the baton may rest in Musk's hand. Institutional accumulation. Whale trackers confirm over 540 million XRP moved into cold storage in the past 24 hours, the largest single-day transfer since the 2024 Clarity ruling. European corridor expansion. Ripple's partnership with Centera FX, Reficent Digital, and the new ECB sandbox test environment show central banks preparing for cross-border pilots. XRP Payment Sandbox. Developers inside X have been spotted integrating ISO 222 messaging, the same global standard Ripple's infrastructure already speaks fluently. Tokenized Wave. BlackRock's asset tokenization pilot, now exceeding 120 billion assets under management, names the XRP ledger amongst interoperable ledgers for testing liquidity bridges. AI integration, Grok. Musk's AI project references real-time liquidity feeds in internal documentation, mirroring Ripple's API terminology. Coincidence? Hardly. Each thread weaves into the same tapestry, a blueprint for instantaneous global money. Every cycle of innovation carries 2 energies, belief and disbelief. When the Wright brothers flew, journalists called it a hoax. When Bitcoin appeared, economists laugh. Now as XRP's role crystallizes, skeptics still ask, why would Elon care? Simple, because speed is his religion. Rocket launches, data streams, neural signals. He optimizes latency everywhere. Money's just a final bottleneck. Imagine mentioning your friend across the world in 1 second, but waiting 3 days for a wire transfer. That's the absurdity Musk can't tolerate, and Ripple already solved. It's not partnerships by press release, it's convergence by necessity. Remember 1995? The internet existed, but few grasped it. Analysts called it a toy for hobbyists until Netscape went public and capital flooded in. By 2000, global commerce had been rewritten. The same pattern repeats today with tokenization. Back then, data became digital. Now value is doing the same. Just as the web needed browsers, finance needs liquidity. Browsers, protocols that translate currency seamlessly. That's XRP's true function. It's not a meme coin, it's TCP IP for money. Zoom out. While headlines chase ETF approvals and meme tokens, institutional funds are executing quietly. They accumulate during boredom, distribute during euphoria. Right now, boredom reigns. Perfect conditions for stealth accumulation. Think of 2020's COVID crash. XRP plunged, retail panicked, and institutions hoarded. History rhymes. The same footprints appear today, except now the catalyst isn't panic, it's integration. XRP is digital oil, powering the engines of a new financial civilization. Ripple is the railroad company, laying the tracks for value just as the Union Pacific did for goods. Elon Musk is the engineer, ensuring that those tracks connect every settlement node on Earth. Banks aligning, whales accumulating, APIs merging, and Elon's silence growing louder. The question isn't if XRP becomes the backbone of X payments, it's when the switch flips. And when it does, every metric, volume, price, adoption could rewrite itself overnight. We'll dissect the technical chessboard, the charts, the whales, and liquidity traps forming before the breakout. Plus, why this alignment mirrors the Bretton Woods reset of the mid-20th century. Behind the retail chatter lies the quiet machinery of accumulation. While everyone argues on social media about ETF approvals, institutions are already positioning. They've read the same memos, attending the same base working groups, and they understand something most retail investors miss. Liquidity precedes price. When central banks built the Bretton Woods system after World War II, they didn't tell the public first. They met in private cabins in New Hampshire and mapped the monetary order. What's happening now between Ripple, the ECB, and Musk financial engineers feels eerily similar. A digital Bretton Woods 2.0 unfolding in real time. Let's talk about corridors. RippleNet now processes corridors across Singapore, London, Frankfurt, Dubai, Tokyo, Sao Paulo. Meanwhile, SpaceX Starlink has quietly laid communication coverage over 70% of emerging markets. Put those together, and you get the skeleton of a planetary payments network. Hardware in orbit, liquidity on Tremaine. Meanwhile, SpaceX Starlink has quietly laid communication coverage over 70% of emerging markets. Put those together, and you get the skeleton of a planetary payments network. Hardware in orbit, liquidity on chain. For the first time in history, satellites could beam a transaction across borders and settle in seconds with XRP Bridge. That's not science fiction, it's systems engineering. Large players think in cycles, not candles. Whale accumulations happen when volatility compresses. Like lungs filling before a shout. Blockchain analogists confirm clusters of wallets linked to corporate treasuries, absorbing supply near $2.30 to $2.40. These aren't meme coin traders. They're funds aligning with Q4 tokenization inflows. Remember how oil futures behaved in 2003 before the commodity supercycle? Flat, then a vertical repricing. XRP structure looks identical on the logarithmic chart. Every revolution needs a rulebook. In 2025, clarity finally arrived. The digital asset liquidity framework passed in Europe, defining how tokenized assets must reference ISO 222 messages. Precisely, the syntax Ripple already uses. So when rivals scramble for complicated retrofits, Ripple's stack is pre-approved by design. Elon's ventures, now rebranded X Finance, have applied for a virtual asset service provider license in Luxembourg, the same jurisdiction housing Ripple's European HQ. That's not a coincidence, that's alignment in legal architecture. The macro backdrop only amplifies it. Global debt crossed $340 trillion. Interest payments suffocating entire budgets. Governments need efficiency, not ideology. A rail that cuts settlement friction by even 0.1% frees billions. That's why IMF pilot programs now mention neutral liquidity tokens. XRP fits that definition like a glove. In market terms, we're staring at an energy compression event. Liquidity, regulation, technology, and narrative all converging. When four vectors align, momentum follows. Let's dive into the numbers, everyone. Support zones, $2.15 to $2.25. Breakout trigger, $2.45. Psychological war, $2.60. These are the same ranges traders identified, but the content changed. Volumes migrating off exchange toward OTC desks linked with Ripple's treasury arm. When supply vanishes from public order books, prices behave like airless rockets. Minimal resistance, maximum acceleration. Indicators echo it. RSI climbing from 48 to 55, a healthy reset. MACD, histogram, narrowing towards zero. Bullish transition, zero. Bollinger Bands, tightening, spring coiling. Every data point whispers the same word, expansion. Retail imagines take profit buttons. Institutions imagine liquidity corridors. When Diane from Invest with D warned about slippage, she was right. Not everyone exits at the same price. Think of it like the Titanic lifeboat problem. Too few exits, too many passengers. Those prepared early, limit orders, cold wallets, OTC access, will navigate the storm. Panic sellers will drown in their own haste. XRP is the steel of the digital skyscraper age. You don't notice it, you build on it. Ripple's the architecture designing blueprints nations will eventually claim as their own. Elon is the developer, racing deadlines to finish a city of finance before dawn. Every great transformation needed that triad, material, design, and vision. Watching it replay in code. Crypto Whale Guru tweets, liquidity equals power. XRP about to flex both. Dr. Whale replies, $10 VTF inflows hold. Remember 2020? Same pattern, bigger base. Skeptics respond, but data wins debates. This opened your eyes. Smash that like button. Ring the bell. Leave a comment with your thoughts. Turn on notifications. And most importantly, subscribe to the Crypto Republic. Bringing you the truth about XRP, global banking moves, and the wealth transfer already unfolding. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.